皆様、大変お待たせいたしました。ただいまより株
Like
式
to
会社
begin the
TKP
earnings presentation
2023
for the
年2
first
月
quarter of
期
the year
第一四半期
ended
決算説明会を
to be
始め
ended
させ
in
ていただ
February
きます。
2023.
まず本日の
First,
出席
let
者を
me
ご紹介
introduce
させていただきま
participants
す。
from TKP.
前方に向かって左手よ
To
り
your
代表
left,
取締役社
Representative
長
Director,
川野
Chief
隆照で
Executive
ございま
Officer,
す。
Mr. Takateru Kawano.
続きまして取締役 CFO
Next,
中村
Director
浩二
and
でござい
CFO,
ます。
Mr. Nakamura Koji.
本日は本日公表いたしました
We'd
決
like
算
to
の
make a
概要
presentation
およ
on
び
the
今後の
results
成
for the
長
first
戦略
quarter
につ
that
き
we
ま
have
して
just
ご
announced
説明
today
させていただ
and
きま
growth
す。
strategy for the future of the company, followed by the Q&A session.
なお本日の終了時刻は
And
18時
we
頃を予定しており
plan
ます。
to end this session
それでは
at
早速中村より
around
ご説明
6
させていただ
o'clock
きます。
Japan time. And Mr. Nakamura is going to take you through the presentation for the results.
皆さんこんにちは。
Good afternoon, ladies and gentlemen.
取締役の中村
Hi, my name is Nakamura, Director and CFO. As usual, I'm going to take you through the results for the first quarter, and then after that, I'm going to hand it over to Mr. Kawano, Representative Director and the CEO, to explain about our strategy. Now, I would like to get right into the presentation. First, this is the table of highlights for the first quarter. At the top, on the consolidated results, so revenue 51 billion yen, EBITDA 7.5 billion yen, that has been announced already, and the progress ratio to that guidance as of the end of Q1 26% for revenue, and the EBITDA progress ratio is 34%. So for the full year guidance, we are planning to turn it into complete profitability for the full year, and we are off to a very good start in Q1 of this fiscal year so far. And I'm going to go into the details for the specific numbers later on. In the second bullet point, mainly for TKP, the meeting rental room business and accommodation business. So the training business has recovered greatly to the pre-COVID level. And with that, rental meeting room business has performed very well. And also, similarly, accommodation business performed very well in Q1. As a result, EBITDA margin was 24%, and we were able to achieve operating profit margin of 20%, which are extremely high levels. Third bullet point, this is about Japan regions. In the previous earnings presentation, we talked about sub-franchise business strategy. But so far, for 3 months, we were able to sign contracts with 2 companies. In addition, the occupancy of the existing facilities has been trending very well. And continuously from the last quarter, in this Q1, we were able to achieve the record high levels of the net sales for Japan regions. And the fourth bullet point, so demand has recovered in full-fledged manner, and we see a full recovery of the demand. So we have developed DX strategy, which we have just announced. And we are going to sophisticate the levels of online booking system for the rental meeting rooms to drive the market. And we are going to work not only on the efficiency improvement of the business and enhance the convenience of customers. And we'd like to reinforce and strengthen our sales and marketing efforts. And we'd like to capture the market demand more widely and more deeply. So those are the highlights. Next, I'm going to take you through the details of the performance results of Q1. First, income statement on the consolidated basis. Please look at the box in red. This is the Q1 result. And year-on-year, net sales 13.18 billion yen, which is plus 28% year-on-year. And similarly, if you look at profit levels, you see a significantly higher levels. EBITDA was 2.552 billion yen, which is up 344% year-on-year. So EBITDA is now surpassing the level of before COVID. So our business performed very well for all the profit levels in Q1. And and if you compare this Q1 result compared to the past results, on the left-hand side, net sales trend, on the right-hand side, EBITDA trend. So mainly for TKP, since the outbreak of COVID-19, the impact from COVID was quite significant. So business performance has been unstable, but at the moment, net sales are recovering quite steadily. In addition, from before, we have been working on a cost reduction through the restructuring, and as a result, profitability, EBITDA, has improved significantly. And if you look at the far right, EBITDA has recovered to pre-COVID level, so significant improvement of EBITDA. This is the balance sheet on the consolidated basis. As you can see, as I have been mentioning from the beginning of this meeting, our business has been trending very well. As a result, EBITDA has recovered to pre-COVID level, 2.5 billion yen EBITDA. So, in terms of the cash flow, we have a good cash flow level now. As a result, interest-bearing debt to be repaid as they mature. And as you can see on this page, we have preferred shares of 1.8 billion yen issued by the subsidiary. We bought them back. And regardless of the purchase of those preferred shares, due to the accumulation of profits, the equity ratio has increased to 35.9%, which is higher compared to the end of the last fiscal year. So from the perspective of balance sheet, it's a more solid or better foundation of the balance sheet than before. Let's take a look at the business result of each business entity. First, starting with TKP entity and the Regis, openings and closures. In Q1, we didn't have a large number of openings, but we have a good pipeline coming up. So in Q1, for TKP, one, which is Rectoré Kobe, which is a large accommodation facility, so big leasable area for that one. And Japan Regis, we opened two facilities, two new openings. And as I explained before, we just opened these two facilities under the new brand, new business format. In the new brand, we are trying to capture the market that is expected to recover more strongly. So this is the first of a series of many openings to come. On this page, we are showing the business performance of the core businesses, which are rental meeting rooms and accommodation business for TKP and subsidiaries who own hotels. And this shows the rental meeting room business and accommodation business performance. And if you look at the red box, net sales and each profit level, Q1 performed very well in the core businesses. And as you can see from the upper sentence, so training demand has recovered very steadily. Actually, a demand surpassing the previous level for trainings, and we have been able to capture this recovering trend of demand, and net sales were up by 42.6% year-on-year. Furthermore, we captured the demand for vaccination center and also the hotel leasing for COVID patients. So net sales and profits performed very well. And SG&A was down year-on-year. We were able to successfully reduce cost continuously from before. So on the back of higher sales, we were able to reduce cost. So we have better efficiency of this core business. As a result, EBITDA and operating profit improved quite significantly year-on-year. That was the result of Q1 for TKP. This is the number of meeting rooms and meeting facilities by grade. We have 239 facilities and 138,000 tsubo, a little bit less than 140,000 tsubo, big space reasonable. And this is the net sales trend by different service type. From before, as we have been explaining, so last year, the year ended in February 2022. I think the performance hit the bottom, and after hitting the bottom in Q2, our business has been recovering very well. Year ended in February 2021. The level was quite high in that year, but in that year, we had COVID subsidy related business, and because of the facilities that we have nationwide, we needed to lease or rent the other companies' third-party spaces. So we were kind of in between brokering, leasing and subleasing. And since the outbreak of COVID-19, if you look at the bottom, 3 billion yen, it's been trending at around 3 billion yen. But from Q2 last year, the trend has turned into the recovery. And in Q1, it recovered to 3.7 billion yen.
On top of that, we were accepting the optional services as well. So we are now capturing the good demand from the core business that's been started from Q1 as well.
加えて、アパホテルの宿泊の需要、こちらもですね、着実に回復しているということも相まって、
growing the demand as well. So because with that, since the COVID level started, we are enjoying the record high level of revenue. And the KPI trend of the rental meeting room business, the sales per tsubo, since the COVID, we were actually enjoying the over 30,000 yen of the unit price. And yes, we are working on the cost reduction efforts, and because of that, business structure is becoming very lean. And then Q2 is going to be the less active season compared to Q1, so maybe the unit price come down a little bit. However, we believe we can have the very stable business. Now, this is the trend of the sales mix. So for the Q1, yes, we had the benefit of the vaccination center. That is the reason why we have the growth. However, the training accounts for 18.5%. It's been growing, and we are capturing the demand for the training users, and that is the reason why we have been enjoying the sales. The last Q1, the sales mix, maybe the training demand seems to be bigger. However, the total the revenue is smaller, and also the vaccine centers demand were actually incorporated into the Q1 results. So just look at the sales mix itself, it seems slow. However, recently we've been actually capturing a very strong demand coming from the training purposes. That is the situation of this Q1. And the business performance of the regions. So as I said before at the very beginning, in the highlight parts, following to the previous Q1, we are enjoying the record high revenue, 4.7 billion yen. So this is up by 11.9% against the last quarter. And when we announced the result for the last quarter, so we had the increase of the franchising cost, and also we were actually changing how to post the expenses. So it's very difficult to actually compare the result apple to apple. So for this Q1, if we are going to make some adjustment, as you can see at the footnote. So you see the adjusted EBITDA and adjusted OP, and then just looking at this. So as you can see, continuously and steadily, both EBITDA and OP is growing, and the revenue on a quarter basis yes, we are enjoying the record high revenue. And at the same time, EBITDA and OP, they are growing, and we are probably enjoying the record high level, and that can be actually clear in this adjusted numbers in the red box. Now this is the number of facilities per brand. So the 2 facilities in Japan and 2 brands in the Taiwan. 4 brands in Japan and 2 brands in Taiwan. And the altogether 184 facilities for both Japan and Taiwan, and also more than 50,000 Tsubo office spaces are being provided. And the sub-franchising. In April, when we made an announcement for the financial results, regional sub-franchise in 2 regions. Yes, we actually had the contract, 2 contracts, as you can see on the map on the right-hand side, in the Koriyama city of the Fukushima and Hamamatsu city of Shizuoka. In those 2 regions, yes, we have the sub-franchising contracts. And yes, we do have a very strong sales capabilities. However, if you look into the regional areas compared to the Tokyo or the major cities, so we are working together with the strong players in the regional areas, and we will be able to increase the sales revenue, and also we want to grow the utilization. This is the reason why we have started this sub-franchising approach. So now we are working together with the strong players in those regions to have this sub-franchising strategy. And next one is about the sales by service. This one, yes, we are actually enjoying the record high revenue, and all the services actually growing, and especially the people are coming back to the offices. So the peripheral services are also expanding. These are the important topics, and also, yes, we are going to increase the revenues for the rooms. At the same time, we are going to increase the revenue coming from the peripheral sales as well. And lastly, this is the last part of my part, the KPI of the Japan regions. We are looking at the occupancy rate. As you can see, the 4 lines. The top line, this is the facilities that are opened more than 2 years ago. So this shows the occupancy. This is the first line. And the second line, this is the occupancy rate of all the facilities, or the average of all the facilities. And the third line, the facility that are opened in the fiscal year February 2021. And the last one, the yellow one, is the facilities that are opened in the last fiscal year as well as this quarter. And at the yellow line, because facilities are opened recently, so yes, if we open the facilities, of course, then the occupancy rate goes down for the momentarily. However, after that, it's been growing nicely. The second line, this is the facilities that are opened in the fiscal year 2021. So as you can see, the occupancy rate is steadily growing. So for the new facilities throughout the year, it is steadily growing the occupancy rate. So that's you can say about the new facilities, and also the existing facilities. Because of the COVID, yes, we were actually losing the foreign affiliated customers. However, they are coming back, and currently it is 74.6%. So the existing facilities occupancy rate is coming back to the pre-COVID level. So new facilities, we are increasing the spaces, we are opening facilities. At the same time, the occupancy rate is growing, and also the existing facilities, the occupancy rate is coming back. So overall facilities, it is over 71%. So the occupancy rate is actually moving along very nicely.
以上簡単でございますけれども、連結
So this is the situation of the consolidated basis, and also I talked about the situation, the TKP business, as well as the Regis Japan business situations. So now I'd like to ask Mr. Kawano to speak about the business strategy. Thank you very much. Thank you. Yes, I'd like to talk about the progress of the business strategy. The first, I'd like to just review the last strategy that we have announced. The sourcing, sales, and business development. Regarding for the sourcing, yes, we are working on the portfolio reform by actively opening new facilities closer to the stations or the area which is very convenient. If we cannot really increase the demand, we are closing some facilities. Or if the existing facility is still having a good demand, then we are going to maintain that. So for the Japan regions, we are taking the sub-franchising strategy. Regarding for the sales, yes, capture all demand through a physical and an online strategy. The demand is coming back, so we like to make sure to capture all the demand that is growing through physical and online. So that in that way we can capture all the demand. And regarding for the business development, so we are developing the software on top of the meeting rooms, and also we'd like to work for space plus contents and increasing the pricing, working through the different partners, and also we are trying to work on the improvement of the unit price. And we were selling the spaces before, but we'd like to offer all the services related to the meetings and events. So we'd like to provide the comprehensive solution to our customers as TKP, so that the catering businesses or lunchbox services or spaces alone, so we'd like to also provide the contents. We'd like to work together with the partners to jointly provide the contents. And so regarding for the sourcing, we like to take the approach to replace the low-performing facilities with high-demand facilities. If the office building, the prices actually, the demand is strong, then we like to open up the spaces in there, and or we can open up the spaces in the commercial spaces as well. So we are always looking for the good locations. So revitalization is a keyword for our business. So the people who are, we are always looking for the spaces that are not utilized well, and so that we like to turn around the space that is going to be utilized for the corporations, so for the events or for the meeting rooms or for the classrooms, so for the training rooms. So depending on the users, we like to offer the spaces combining together with the contents.
And this is a strategy for Japan Regis. As Mr. Nakamura mentioned, our strategy is sub-franchise strategy to increase the occupancy, to enhance the EBITDA furthermore. And this page shows the sub-franchise network of Japan Regis. Under this strategy, amid COVID-19, the flexible office demand has been increasing even in regional areas. So we don't really do that directly, but we leverage local companies' sales and marketing capabilities to have a good sub-franchise network across the nation. Initial cost and fixed cost, from the Regis perspective, they are borne by franchise owners. So we don't need to deploy capital, which is a large merit for us. And another merit is that we can efficiently expand our network. Within this year, in addition, we are planning to sign 4 more or 5 more contracts of sub-franchise contract. So transportation, retailers, and other industry companies, we are trying to partner with those companies. This page shows the picture of the newly opened Meitetsu Nagoya Station, direct access to the station, upper space of the department store, new opening. And the department store industry landscape has changed so much. And there are many inquiries coming to us about how to utilize the open space of department stores. And this whole building used to be a department store from ground floor 1 all the way up floors, Nitori Tsutaya, Muji Loft, and Meitetsu owns this building. So this is a comprehensive mixed purpose type of building, and this is how department store industry is trying to survive the business environment. So TKP would like to cater to various needs, not only the rental meeting rooms, but different contents to end customers. And this space in Nagoya can accommodate maximum 1,800 people, and as a large project office for municipalities, we have received good orders, so this new space is off to a very good start. This page shows before and after COVID in terms of the average sales per deal or per customer. EC operators. This is the example of the major EC site operator. Before COVID, they were using our service only for face-to-face meetings and events with customers. And after the outbreak of COVID-19 for 2 years, they didn't use the space at all because the infection was expanding. So they only did the distribution of contents. So although we were generating sales from them, but we didn't really provide with them spaces, so revenue tanked. But now we capture the demand both for online and offline from this particular company. So compared to pre-COVID level, net sales level is 2.5 times more. And they do the hybrid style of meeting and parties. So compared with offline only, the number of participants is much larger. So traditionally, they have an event in Tokyo only or Kyushu, inviting people to one particular location, but they do physical event, and then they distribute the contents online. So the number of participants is much higher. So expense is much higher, but there's no limit as to how many people can participate. So the cost per head is much lower from the customer's perspective. So for a customer, this is a great deal, and for TKP, we can generate sales which are 2.5 times higher. So it's a win-win for us as well. And due to COVID, we don't want to pack people. The customers have need to have larger space, to have an interval or distance. So net sales per customer or net sales per head are higher compared with pre-COVID. And on-demand space that is required amid COVID. So due to COVID-19, the people's work style has changed. So at one point in the past, everybody was remote working, but many people are coming back to the office. Of course, there are some companies who still remain remote working for their employees, but many people are coming back to the office, but there are employees who work remotely. So they don't need a large space like whole building. They don't need to own a larger space anymore. So there's a trend that they are scaling back the space for their headquarters. This year and next year, mainly large corporations and various corporations are trying to scale back by optimizing and downsizing the space for the headquarters. And when that happens, then it becomes so interesting in terms of how companies use the space of the office. And the TKP meeting rooms are the temporary spaces for companies. They have an office and they have their own private home, and they commute back and forth. Then they stop by at the restaurant, and they stop by at various places, and they spend money, and then Japanese GDP goes up. But when they scale back, downsize the office, then they will need more spaces so that employees can gather. And temporary, they need to lease the space for employees to gather, and they need TKP. They need a satellite office, which is Japan Regis. So due to COVID-19, the people's lifestyle and work style are changing so much. So depending upon the needs that are rapidly changing, I think we have to cater to different needs with our spaces. And now, under the current circumstance, prices are increasing, inflation, and companies are trying to improve the efficiency, and they have to raise prices. They have to raise salaries for their workers. So they cannot simply raise salaries for workers. They have to provide their employees with training and education to maximize the human capital. This is going to be the key for the success for many companies going forward. So for TKP, I would like to provide them with the spaces, not only providing them with spaces, but I would like to help them so that they can have successful training programs, including dispatching teachers and trainers. So training demand is expected to grow in the future. So the training is the area that we'd like to focus on very much for the future. Let me next talk about our strategy, because we have a much slimmer, lean organization, including headcounts. So we expect net sales to go up from now on. But net sales are coming back so rapidly now. So we have our structure to respond to it. We should not really be labor intensive. In the case of B2B, differently from B2C, we need people. In the case of B2C, you can just input ID and password, and you can just access to Rakuten Travel, and you can just make a booking easily. But when it comes to B2B, we need some specific demands that we have to address for businesses. So by deploying ITs and having portals ready for businesses, which has been challenging. But we are really getting into those areas now in the B2B, and we are working on this DX strategy. And I think our business is going to be much more efficient with this. And we are going to have two different camps of customers. One camp is a group of companies who use our service and product temporary, but another camp is a company who constantly use our products and services. And actually, the time and energy required is about the same. But we've been deploying people to address those two different groups of businesses. But the point is to improve the efficiency by digital technologies. And we have human resources, and we'd like to use those for the consulting, sales, and marketing to increase the average unit price per customer. And that's the area that we'd like to deploy more people. So the program management system and the sales management system, I would like to replace people with IT systems in those areas. And as a second step, we'd like to develop a customer portal system, IT system, so that customers can make a booking on their own, especially repeating customers can book spaces on their own, and they can see their requirement met by this customer portal site.
And the following stage, see our space, the real estate market data, and also the for the sourcing, we are always trying to understand the market situation, and also our sales data. We like to combine those data so that we can improve the business performance efficiency. As I said before, we'd like to really enhance the consulting sales activities. And the digital technology is going to be the measures, not the purpose. So also, we have to make our customers sticking to our businesses. We like to really work on the dynamic pricing or management. For that, we like to leverage technology. And before, we are getting the inquiries from customers. They're from the call center or our salespeople. We had to search the venues and try to make some coordination in order to offer the booking. However, from now on, the customer can do the searching of the venues on their own. They can make booking. They'll make the payment, and before the and also the based upon the history, they will be able to make the next booking. So that without much stress, the customer can be repeating customers, and we like to provide the technology so that they can have easy system to utilize, and we'd like to support that. So this one, what I just explained to you is shown in this chart. So we have the loyal customers and middle customers and light users. So for the light users, we would like to automate the services through this portal service. For the middle users, we like to enhance the consulting services so that they can move on to the loyal customers. And so currently, one customer is actually spending the 500 or 600 million yen per year or so. So we'd really like to grow the middle customers to be loyal customers. This is becoming to the end. So we are coming into the second quarter. So up until May, that was the first quarter, and Nakamura-san just said we'll be enjoying the growth of the EBITDA. We are enjoying the record high revenue, and also the revenue is also the second highest, and we are probably going over to going back to the pre-COVID level for the next quarter. So the current situation, June, July, August, we are enjoying a very good high performance, and there is a 7th wave of the COVID. We have some concerns. However, we don't really see many cancellations at all, and because we're B2B business. Of course, it's really depending on what the kind of initiative the government is going to take. If the government really encourages the remote work, maybe that may be affecting. However, the government is paying closer attention to the patients of the serious conditions, and all the governments are trying to focus on the economic activities, and also the companies are not that easily affected by these case numbers at all. So the recent situations, we don't really see the cancellations, and the autumn for this year and for the spring next year, we are seeing a very strong orders. And for the next spring, we already got some booking for the new recruits training, and we don't have any available spaces for the additional orders. We are doing the sourcing. So especially for the demand for the flexible spaces, I think that is moving along. And because many companies are actually reducing the office spaces, and they are trying to rent the spaces when it's needed. So for the training or for the new recruits training or events, so the numbers I'm just talking today, this doesn't really include the revenue coming from the lunchbox or catering services. So this is only for the space, but still the EBITDA like over 20%. So this is go over the pre-COVID level, and also revenue is growing. And the catering and lunchbox, even if the demand is not coming back, it's okay. If the demand is coming back for the lunchboxes, the catering is good. But the per-day demand is actually coming back from summer and autumn as well. And if we are going to have more demand coming from that, I think it is going to give us a more tailwind. However, the companies are looking for the flexible spaces. That demand is very strong, and So we'd like to make sure to capture the demand so that the content plus space, we'd like to make sure to provide a good solution to utilize the spaces with contents. And also resort hotels, Ishinoya, it's performing very, very well. So currently, the GoTo travel is being suspended by the government. However, the resort hotel demand will coming back, I believe. And also the training with accommodations, it is getting some attention. So the training with accommodation per business unit, we really like to focus on that so that we can get the demand. So especially for the winter, well, we've been having a very difficult times. However, now I think we are coming to the 8 o'clock in the morning, so we started to see the sunlight, and then so the TKP is going to coming back to the trajectory of the success. And thank you very much. I'm convinced that we are coming back to the trajectory of the success. Thank you.